Hey guys, Crypto Sunday, and it's a red week, as same as yesterday on the stock side for me. No surprise with crypto being down, and it is down a little bit more today. And so I'm down about 11%, £41,000, quite a bit. But we're sort of getting towards the end of the summer period. It's sort of expected to pick up towards the end of the year. A number of factors affecting that, so we'll have to see. And obviously, we're way above sort of the beginning of the year, the ETF launches and that sort of thing. We're only sort of down 25% from the high. We were down at sort of 49 at the beginning of August, and that sort of Japanese spill. So yeah, see where things go. Did have a positive coin shares report, although next week's one or Monday's one is going to be negative with a reasonable amount of outflows, if I recall. We'll have a look at that. So yeah, looking at by asset, the previous week at least, Bitcoin saw a reasonable inflow, 543 million, an outflow of 35 out of Ethereum, still sort of grayscale outflows on the Ethereum ETF, and sort of not really a lot of inflows to offset that. The multi-asset one though, 20.3 million. I do think that's really good to sort of just have a constant flow into that now, and it's sort of double digits pretty much every week, where it wasn't sort of towards the beginning of the year. So that's good to see. Very small inflows into some of the other coins, Solana, Litecoin, XRP, people shorting Bitcoin at the same time as putting in long Bitcoin. So opposing views there, but it's a tiny amount. Cardano, and then 2.9 million into other. So that's over 1%. And by country, it's sort of almost a green sweep. Just a couple of outflows from Germany and Sweden, but both sort of single figures, and inflows into Australia, Brazil, as always, Canada, 16 million into Hong Kong. That's pretty good. Although they've been sort of up and down all over the place. They're at sort of 394 million, and they sort of seeded it, I think, with 200, 250. So that's sort of barely up. They're not really getting into it too much just yet. Switzerland, 13.9 million, and then obviously the US, that includes outflows and other stuff. So yeah, interesting. And just sort of looking at the more recent this week's news. We did see the first inflow for a little while into the Ethereum ETFs, sort of a little bit of BlackRock, not a lot of BlackRock you're seeing, it's zero sort of most days, which means sort of no outflow. They've got 1 billion in assets under management on that, but you're up to 2.56 billion on outflows out of Grayscale. So yeah, it's been sort of almost flat trading on the Ethereum ones. Looking at the Bitcoin ones, you saw 4 days in a row of outflows this week after a positive Monday. So pretty much everything, negative for the last week. Sort of the bigger ones at least, Fidelity, Bitwise, and Arc. And we saw the first outflow from BlackRock since May. So not looking all that good, and I sort of contributed to the downside, but it's not, huge money, especially compared to sort of the previous couple of days. We did have 450 million inflow, so pretty much offsets all this negative, but it's pretty flat at the moment. We'll have to see if after the summer this sort of kicks off again. We do have the Morgan Stanley, everyone's sort of looking at. Their 15,000 advisors now, sort of, can't remember whether it is now or it's upcoming, but available to trade these. So if none of them own them, then there can't really be any selling. So this is a purely upside move potentially. Well, this was interesting. Tether moving into another country. They're sort of getting a lot of adoption from the Middle East and Asia, sort of emerging market countries, and they've launched a UAE dirham pegged stablecoin. So moving a little bit away from the dollar. I think they do have a euro one, but they don't appear to be very popular in Europe. They don't have a MiCA license under the new regs, it seems, so they're sort of losing trade there and not really allowed to legally trade, from what I gather. So they're sort of being embraced by other countries, and they think launching this, will sort of give them a little bit of a boost. And it is fully backed by liquid UAE-based reserves. So whether they mean sort of Dubai listed bonds and that sort of thing, they're not sort of backing it with dollars, but just pegging it to the stable coin. I think their dirham is sort of somewhat linked to the dollar as it is. I don't think it's quite sort of pegged the way some are, but yeah, I don't think it's entirely independent either. But that seems good, the whole stablecoin being backed by dirham-based assets. There wasn't a huge amount of news this week that I found sort of particularly interesting, just the sort of normal Forbes articles and things saying an earthquake or a meltdown or whatever, a landslide is coming, and you sort of read the article, it is just clickbait, they'll sort of give the usual potential, bullish things coming up, but there's no sort of real news there. I always thought Forbes was a sort of more reputable site than that, but it seems certainly not on the crypto side, at least. So I thought I would highlight a Substack that I have been sort of reading quite a bit from Arthur Hayes, the former CEO of BitMEX, the leverage trading platform. And yeah, he sort of moved on, it seems, largely to writing on Twitter and Substack and that sort of thing, just providing sort of macro insights, really, but with a crypto tilt and the sort of crypto almost lowbrow, attitudes towards everything. So the topic being the sugar high, which he is calling rate cuts, being sort of a quick boost that doesn't really have that much effect on the markets, as opposed to sort of QE, essentially, which he's saying is the sort of slow, long-burning real food, as opposed to, just a quick boost from rate cuts. Whether that is entirely true, not really sure, but yeah, he certainly says they're going to be sort of going for rate cuts, maybe not doing QE in full-on QE just yet. Does say that he thinks the yen carry trade sort of saga isn't quite over yet. I was sort of similar opinion, really. It seemed a little crazy that would be entirely sort of unwound in a few days after being sort of 10 years old, 15 years old. People have been borrowing at sort of 0% in yen and investing elsewhere, whether it be other countries' bonds or just stocks or gold or whatever. For that all to come off in sort of a day or two seemed a little bit crazy. So he does think that can come back with sort of all the other sort of central banks cutting rates and then still potentially raising rates. But if not that, at least keeping rates steady will sort of potentially strengthen the yen. Does highlight the US's sort of, as he calls it, hyper-financialized economy. I think the public are more sort of focused on stocks than certainly we are in the UK. It's sort of been highlighted. Cash ISAs, for example, outstrip stocks and shares ISAs by sort of 3 to 1, 4 to 1. I can't remember what it was, but it was a hell of a lot. We've always seen sort of stocks as a bit of a scam, if you like. It's probably down to sort of parents' experiences, maybe sort of in the 80s or the dot-com bubble or something. People lost a lot of money and then they sort of, passed that on to the kids, basically. Whereas the US have always sort of seen it as something positive to focus on, and sort of stock market going up makes them all feel better. And that is in nominal terms, as Arthur sort of says. If it goes up 1% in a year and inflation's 3%, they don't tend to focus on it all that much. They just see their stocks are up 1% or 3% and it was 5% inflation. They're still happy, basically. So it can be something for the US to sort of focus on, and a way to sort of help the debt you know, have stocks going up 3%, inflation at 5%, and it sort of whittles away the debt through inflation, essentially. Um, and the capital gains, of course, a lot of this money isn't in sort of tax protected accounts. It's just in general accounts. They don't have the sort of ISAs that we do, and so capital gains drive quite a lot of tax revenue. So if you sort of have a falling stock market for sort of a couple of years, then the government loses a huge amount of tax, where again we sort of wouldn't probably really in the UK. So they don't really want the stock market going down. So Bad Gurl Yellen, as he calls, has been sort of almost fighting Jerome Powell with the rate cutting cycle, sort of from September 2022, and we've got into this sort of fiscal dominance scenario of stimulus, government stimulus meaning a lot more than central bank rates. And yeah, you've had sort of various things, the Fed reverse repo and sort of treasury bills, like issuing a lot more treasury bills as opposed to sort of 10-year, so treasury bills being sort of 1 year or less notes, and rather than sort of 10-year, 20-year, 30-year bonds, which it seems like if they issue more treasury bills, they sort of get bought by banks, and then the banks lend, and it sort of puts money into the economy, whereas 30-year bonds may be bought sort of by the treasury, and sort of that money just sits there and doesn't really go into the economy. So Janet Yellen is sort of using her tools, if you like, that she can do to sort of juice the economy. And his sort of theory for the end of the year, he sort of mentioned this a few times, that they've pledged to issue 271 billion of treasury bills again, which can go into the economy, and 30 billion of buybacks of sort of less liquid bonds. So that would sort of help the bond market. And they also have 740 billion left in the Treasury General account. So this is something that sort of doesn't really get highlighted too much. You've got another debt ceiling situation at the sort of end of the year, I think, turn of the new year. And if the Treasury has 740 billion in the Treasury General account, then Congress will be sort of less likely to agree on raising the debt ceiling. Where if you sort of run that down and they've run out of money, it kind of makes them stuck really, and they sort of have to raise it, so they can sort of drain that down, and again that would sort of only really go into the economy. So it's potentially sort of best part of $1 trillion or slightly more that could end up going into not the economy but asset prices, asset markets. And a great deal of that would go into stocks and probably a load into bonds, but even a tiny amount of that going into crypto would sort of juice the price, because it doesn't take a huge amount. There's sort of a multiplier, as we say. If you put $1 billion into crypto, you get sort of maybe 10 billion, 15 billion in market caps. So with that being the sort of end of the year move potentially, we just have to stay patient. Although it is sort of rather red this week. Bitcoin is down 7.8%, not particularly good. Solana has been absolutely hammered, 14.5%. So that's underperforming pretty much everything. Ethereum down 8.7%, Chainlink down 9%, XRP down 6%. Audius 4% after a sort of positive move today. Power Ledger down 11%, Internet Computer down 10%. Matic, Polygon, the actual worst performer of the week, 22.5%. Gala down 9%, Quant down 8%, Basic Attention Token 11%, and VeChain 13%. So, yep, it's rough. Keep getting these sort of big down weeks and slightly larger up weeks, but yeah, there's more more down weeks essentially. So we just keep slowly trickling down, but some people sort of seeing it as a consolidation that is fast coming to an end, with us now being in September. So we'll have to see. Leave your thoughts in comments below, and like and subscribe. See you soon.